want to return to the worksheet that we've been using thus far, and I want to look at these completed boxes that we did in the prior worksheet and how we can use these to actually prepare the statements that we have to complete as far as the statement, the cost of goods manufactured statement and the cost of goods sold statement, as well as looking at some of the information from the balance sheets. The first statement that we will look at is going to be the cost of goods manufactured statement, and we will get the information that we need to prepare this from box 2 as well as from box 1. And where we're going to start is we start this actual statement with the beginning inventory found in box 2. We then will come in and insert box 1 to find that direct materials used into our statement, and then we will finish out with the rest of box 2. With this particular information, we also will have to go back in and we are going to have to look at the the worksheet that we have right here to be able to finish this information, because those items that we had before for the manufacturing overhead, when we get ready to look at our actual statements, we will have to go in and list these different amounts out. So we will have to come in and pick up these items that were found here, and we'll have to list each of those items out on the statement when we get ready to do our manufacturing overhead part of the statement. So when we go back and we look at our boxes, and remember this is that cost of goods sold, cost of goods manufactured statement is what we're going to be looking at here. This is for the period type of a statement. And it is for the period ended, in this case, November the 30th is what we're going to be looking at for this statement, because we went November 1st to November the 30th for the statement. And so in the header you would have the company name, you would then have the statement name, and then you would have the date, in this case for the period ended. So when we start this particular statement, again, we will start with that box 2, which is the beginning inventory for the work in process account. And so you will need to label that as such. And I'm going to go all the way over to the right side and start the column there. And so that's going to be that $52,700. Now the next thing you get to in box 2 is the direct materials used. We cannot just use that $169,800 number. We actually have to go in and work it. So we will have to go back to box 1 and start filling in the information that we have. And so in finding this direct materials used, we are going to start with our beginning inventory for direct materials. And in this case, I'm going to go all the way pretty much to the left with this particular statement, and I do start statements with a dollar sign, and that is going to be $38,000. I then will add to that my purchases at $184,500. I have to add these two numbers together, and this is going to give me really my materials available. So again, that's going to give me my materials available if I take and add this 38,000 plus this 184,500, and so my materials available will be at 22,000. I'm sorry, $222,500. I then will have to subtract out that ending inventory, so you will see less that direct material ending inventory at $52,700. And when I take this material available and I subtract out the $52,700, this is going to leave me with my direct materials used. So I'm going to come over one column, put in my direct materials used, which would be at the $169,800. I then am going to have my direct labor, and the direct labor number was $42,000. And I then will come in and list out this manufacturing overhead, and the manufacturing overhead amount, I do have to list those individually. So what I will look at is the first one is this depreciation for $16,800. So I would come underneath it and I would put depreciation, and that is part of that factory, and it was for $16,800. Notice I do have a dollar sign. I also should have a dollar sign here because I'm beginning columns, and whenever I begin a column, I should list out a dollar sign. So I do have the depreciation for the factory. The next item was factory supplies used. So I would have the factory supplies at $16,800, and I'm going to go to the next page and finish writing these amounts down. But I also have the factory utilities, and the factory utilities are at $10,200. You notice I have indirect labor, and that's at $48,000, as well as having, let's see, the rent and the repairs for that factory equipment at $47,000 and $4,500. So all of these amounts that you see will move forward to that statement. So I'm going to finish writing out this manufacturing overhead, and so I'm going to put, continue right here. And so I would have the factory utilities at that $10,200. I would have the indirect labor, and that would be at the $48,000. I would have the rent on that factory equipment, and that's at $47,000. And then I would have the repairs on that factory equipment, and that would be at $4,500. So what I would do now is I put an underline there because I'm adding up everything for manufacturing overhead, and I'm going to come up with that total for manufacturing overhead. And that total, I can put that total in for total manufacturing overhead. The other thing that I can do is if I did not want to put a total column in here, I can add up all those, and then I can just come in and put that amount in, which was at $143,300. So I don't have to write the word total manufacturing overhead here. When I total it up, I can actually total it and just write it over to the side. Now, the next thing that I'm going to have, if I look at box 2, you notice that direct materials, direct labor, and manufacturing overhead. I'm going to go back to box 2 so you can see it. The direct materials used, the direct labor, and the manufacturing overhead add up to this total manufacturing cost. And so that's the next thing that I am going to have listed is going to be this total manufacturing cost. And so what I'm in essence doing is I am adding up this column right here, which does include direct materials used, the direct labor, and that manufacturing overhead. So I'm adding up this column, and it's going to be that total manufacturing cost. And when I add those up, that TMC that I have is 355,100. Now the thing I want you to see here with this is that you notice I have 3 columns now, and just like here I had 3 columns. So what I'm going to do is I'm going to take this beginning inventory and I'm going to add that. I'm going to put a plus there even though you wouldn't have it in your statement. I'm going to add that to this last column right here, and it is going to give me my cost available. And so if I take that 52,700, which was the beginning inventory, I add it to my total manufacturing cost, which was 355,100. This is going to give me $407,800, and that's my cost available. The last part of this statement, I have to subtract out or less the ending inventory. So this is going to be the ending inventory for my work in process, which was at $42,000. And this will give me that cost of goods manufactured. And so the cost of goods manufactured here, I should have a line right there because that was doing mathematical. I was adding things. Now I'm going to take the cost available minus this ending work in process, put a line there because I am doing a mathematical computation of subtracting, and I get $365,800. This ends this statement, so it should have a dollar sign and it should have a double underline. So again, dollar sign is most definitely needed to end, and a double underline to finish this out is needed on the statement. And this is that cost of goods manufactured statement. The next statement that you're going to have to be able to do is that cost of goods sold statement. And the cost of goods sold statement is coming directly from that box 3. Now remember, box 3 is your finished goods inventory, and so what you're looking at with it is you started out with your beginning inventory of 72,500. You add in that cost of goods manufactured that we just got at 365,800, because remember your boxes should match what we have. Then your cost of goods sold was, let's see, 369,500, and we found that in that last video when we were doing our boxes. And then our ending inventory was found to be 68,800. And so again, this is what the boxes look like. If we have something coming in, they are added. If something is leaving and going out, it would be subtracted to our actual inventory boxes. So this is the box that we would use to come up with that cost of goods sold schedule. What I want you to remember is from Accounting 101, what our cost of goods sold looked like is we started out with our beginning inventory. We added purchases. That gave us our cost of goods available for sale. We subtracted out our ending inventory, and then we had our cost of goods sold. Now this is under the retail side. So this is where we have purchased things. We are now moving to manufacturing. So for Accounting 102, when we look at this statement, we again will start out with our beginning inventory, but it's going to be our beginning finished goods inventory. We will add in our cost of goods manufactured, because we've now manufactured. We haven't just purchased these goods for resale, we have actually made these goods. So it would be cost of goods manufactured. This would give us our cost of goods available for sale. Then we would subtract out our ending inventory for finished goods, and then we are left with our cost of goods sold. Now remember, this is in a manufacturing environment. This is what we would be looking at. So this cost of goods sold statement, this again is for a period ended statement. November 30th. We would start with our, what we have in box 3, which is that beginning inventory for finished goods, and that amount is at $72,500. We would then add the cost of goods manufactured, which is at $365,800. This will give us our cost of goods available for sale. So what I would do here is take the take the $72,500 plus the $365,800, and this will give me $438,300. And then you would say less the ending inventory for finished goods, which was valued at $68,800. And this leaves you with your cost of goods sold. And your cost of goods sold here is $369,500. Again, you would have here a $sign to begin a column, $sign to end the statement, and double underline to end this particular statement. Now, this cost of goods sold statement actually could be fit within the income statement if you want to, and a lot of companies do put this into the income statement, or you could do a separate cost of goods sold statement. Now, with the income statement, so it is the income statement. Again, it is for the period ended, because we're not just looking for one day, November 30th. In this, you are going to start with your sales figure. So you are going to have to go back to that worksheet and figure out your sales revenue. And your sales revenue was at $1,350,000. So you would have the $1,350,000 would go here. Then you would have your cost of goods sold, and that amount was the $369,500. So you would subtract that out and get your gross profit. So in this case, I'm at $980,500 is what I would have as my gross profit. I then would list out any of those operating expenses. And so in this particular items, for those operating costs, I would have it broken down between my selling expenses, then had my admin expenses, and those items, remember, are period cost. I'm not going to finish out the statement, but I would list those out. I would total those expenses out, and then I could get to that net income. Is where I could end up being. But just remember, those are all the period costs that would go in that bottom section. And then as far as the balance sheet goes, remember, balance sheet is a snapshot. It's one moment in time. So the date here is just going to be November the 30th. I'm not sure what year I was dealing with. All right, it's November 16th. With this one, I am going to be looking at this accounts receivable number. I will be looking at the cash number. So cash is at 260. Accounts receivable was at 275. I am only going to look at the current asset section of the balance sheet, because that's really all that's applicable for what we're doing here. So with the current asset section, you would list out your cash, and your cash should be at that $260,000. The next item in order of liquidity would be that accounts receivable, and accounts receivable was at 275. And then I'm going to list my inventories. Now, my inventories have to be listed in order of liquidity. And the most liquid of my inventories is my finished goods, because finished goods is what should be sold first, because those have already been finished and completed. And I'll look at the ending balance. So the ending inventory balance, if I look in my boxes, I find that box 3 has an ending inventory of $68,800. So I would put the $68,800. Box 2 is in manufacturing, so it's going to be the next thing that's going to be finished. And so that's that work in process inventory, and it is at $42,000. And then I get to that materials inventory, which is the least liquid of my inventory, and that's box 1. And it is at $52,700. So then I would take and add these up. So I would get $68,800 plus $42,000 plus $52,700. I did not get that right, so let me plug it into my calculator again. And that is going to give me $163,500. I would then list any prepaid items after that, and then get my total for my current assets. So my total current assets here with what I have is 260 plus 275 plus 163,500, which is going to give me $698,500 is what I would have for the total current assets, looking at cash, accounts receivable, and the inventory items. This is in order of liquidity. Your cash comes first, then your accounts receivable, then your inventories. And remember, your inventories do have to be listed in this order, because this order of liquidity is how we look and list our assets when we're looking at current assets. So make sure that your balance sheets do look like this whenever you are preparing them.